Jam everyone, welcome to today's class. In our last class we really talk about liquidity, how liquidity is being formed, what's liquidity, because we just entered the chart and we just been hearing liquidity here and there. What's liquidity and the rest of it, right? And we did a lot of stuff. So today we'll focus on point of interest and we'll do live trading on BTC pay USDT perpetual, right? So just stay with me while we focus on that for today. But let me quickly walk you through our previous class. So you can go to our trading view. Okay. Can go to our trading view. You select chart. Right. So in our last class, what we did yesterday was we did a type 1 liquidity, right? And we didn't have time to talk about type 2 liquidity. Okay, we don't have time to talk about type 2 liquidity. So while doing that, I'm going to scan through very briefly, not all that already. This is what we mean by type 1 liquidity. I always wanted to have this in the back of your mind. You always have to have this. All right, this is it. This is it. This is how you do it. This is type 1 liquidity. Oh, yeah, you hear me? Oh, coming. So for those of you joining today, we will be doing live trading on BTC. So but for there, let me just kindly recap of our previous class. That's what I'm trying to do. So the people that didn't join will have access to it. This is what we call by type 1 liquidity, right? This is what we call by type 1 liquidity. Okay, and we kindly talk about type 2 liquidity. This is not type 1, this is it. This is type 1 liquidity, right? And this is another, this is type 2 liquidity. This is type 2 liquidity. This is type 2 liquidity. Miss Elijah, welcome. Jim. This type 2 liquidity, we expect after breaking this previous, I was expecting to pull up like this, but no, what happened? The market test here, come down again and break it. That's type 2 liquidity, right? So this is for bullish momentum, that is buy setup for type 2 liquidity. Okay, this is a buy setup for type 2 liquidity, and we'll be using text. takes James, Cynthia, Simon, and text. He had it, so that is it. We also have arrow mark, so that is it. You have seen this point. All right, so just wanted to test something. All right, so this is the two types of liquidity. These are two types of liquidity. So we have the type 1 liquidity in our last class. Type 1 liquidity, that is green. And what this is what type 2. No, type 2 liquidity, right? This is type 2 liquidity. So in this type 2 liquidity, this is how it goes. So if you want to, this is for the buy setup, right? This is for the buy setup. So for the buy setup, this is the kind of liquidity, type 1 liquidity we have. Yeah, now please, if you have not signed up using the link, please endeavor to do so. This is the buy setup, right? So if, let me confirm from my people. Welcome everyone. I hope you are following. And you can see the screen very well. All right, let's go back to our trading view. So this time, people will be talking about why does he do this every day? Well, I have my reasons for doing this, because consistency will make you not to forget whatsoever you are doing. You keep building yourself, and with this is how you can understand trading easily, being consistent and backtesting. All right, so in this chart, for example, okay, this is the buy setup, and we can, if you want to do for the buy setup, and we can also analyze this for the sell setup, right? Sorry, that is for the buy setup, and I can also do that for the sell setup. So this is how it goes. This is the previous lower low, it forms another higher low, it breaks the previous lower low and gives us the present lower low, it comes out again, give us another higher low, it breaks the previous lower low, it comes up again, it gives us another higher low, it breaks the previous lower low. this is exactly as what type 1 liquidity, right? So this is gonna be red, this type 1 liquidity, and we have another one here. The type 2 it breaks this one. Some come up here again. Instead to break this one, if you didn't, you go up there. All right. So this is it. This is type 1. This is type 2. And that is the sell setup. All right, this is the sell setup, so that you will understand what I mean. Sell setup. This is sell setup, and this is the buy setup, right? So that is it, guys. So now for you to see this, instead of you to, and this is gonna be to form our breakup structure. This is our breakup structure, right? This is another breakup structure. It breaks the previous higher high. Have you seen it? This is another breakup structure. But for the type 2, we also have this. We also have this type 2. We also does it. So that is it for the buy setup. So if you come for the sell setup, we know breakup structure. This one breaks the previous low, right? Previous low is broken, as you can see. Sorry. Previous low. As you can see, all these are breakup structure, right? You see there was a lower low here, it breaks it, and right down here comes here, it breaks it. So that is just exactly how it works. Then for this one, this is our higher high, this is our higher low, and this is our lower low, lower high, lower low. This is not a lower high. Create another one. This is an invalid lower low, and guess what happened here? This other one, it breaks this one. So there is a breakup structure over here. So coming to the chart, and also I'm just trying to do a recap of about what we did in our last class for the sake of those that were not in class. Okay, so Let us target this type 1 liquidity in our chart. We have a lot of charts here, so you can decide to pick anyone you want. Alright, you can decide to pick anyone you want. So this is it. This is example of type 1 liquidity. Guess what happened to the market? This was a lower low. This was a green. All right, let's look for it. See what happened in the market. This was a lower low, forms another higher high. From the higher it forms another higher low, and the market peep to this and come back here, right? Goes up to here and come back here, because this one is longer. You show well is a green that is longer. See what happened to the market. You see, it breaks another one, come down here, then the market moves up. So if you can see this well, coming, that's it. So yeah, we can mark our this is our break of structure. Breaks it all. We can delete this. You see, to make it clear, we can what am I doing? This is a break of structure. This higher high broke the previous higher high, right? And this is our protected liquidity. This is our protected swing high. Have you seen it? A protected swing high, right? That is our protected swing high. On no account should your liquidity be far away from your protected swing high. This is our liquidity, right? And the next one here goes from there. This one breaks our previous higher high, which was this place. This was our previous higher high. This was our previous higher high, right? This was our previous higher high, right? Okay, so that is it. This was our previous higher high, and this our liquidity. This is our liquidity. I'm coming. This call. So sorry, call was interrupted. Come in. So 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 this is it. So this is it. I don't. All right. So interesting. Yeah. It's interesting. Just stay with me. So the red box over here is my series of, it's an uptrend direction. The red box over here is my series of higher high. Is the swing high, right? Swing high is formed at higher highs. I told you that. So this is it, right? The red box is the swing high. Well, the green box, the blue box is my swing low, which is my higher low. Okay, I'm gonna color it right now, so don't panic. That's green. Let me not use green, let me use purple. So the purple box is my swing low, higher low. Yeah. So as you can see this, I just want to make sure that you understand where we are going. This pattern follows exactly the same thing that happens in type 1 liquidity, right? What I'm doing there is showing you exactly what is happening in type 1 liquidity. Well, the black lines over here is where the break of structure tends to take place, right? The break of structure tends to take place here. That's it, and that is how we do it. Okay, the break of structure happens there. So we can do numerous example, and you can, as you can see, you can from here, if you were looking for an entry, you buy. The liquidity over here is this black line here is my protected low, right? My protected swing low. That is what this yellow line means. Okay, that is what the yellow line means. Sorry, not text. It's what that yellow line is, what exactly this signify. Okay, protected load, and for no account that your liquidity should be far away. This is what I mean. This box here, okay, this blue box here, let me feel it. The blue box over there is what is called the gap between my liquidity. This my liquidity is going low. So that is it. So while we have this again, after having this protected high and protected low, this is what is going to happen in the market. It's a protected low, and that is what is happening in the market. So this is your protected low and this is your protected high. So now you're going to watch when the market is going to go up. Well, market is going high. I did live streaming. So if you after you have followed what I show you about the type 1 liquidity, you can now go to the BTC chart now. Okay, this is already in our Bitcoin chart. You go to the what I did was in the 15-minute time frame. Let us go to our 4 hours time frame. Just stay with me. Alright, everything has changed, so let me just delete it. I'll draw it again for you guys. So I was doing the wrong thing. Just wait. You do your the market direction and your analysis from the 4 hours time frame. Okay, you don't do it with 15 minutes. 15 minutes is when we enter the trade. 15 minutes when we enter the trade. So let us do it quickly so I can move into today's class. Let's delete all this. I want to delete it. Don't worry, I'll be snapping this time around. Let me just make sure everything is right. Okay. This is our 4 hours time frame. This is our 4 hours time frame. Was it this one I was dealing with? Okay. Let's go with this one. So now, doing your type 1 liquidity, I said these are the market goes like this. You're going to have a sweep here, break of structure, and this is your liquidity. Then another one, right? That was what we said about type 1 liquidity. Now type 2 liquidity is like this. Market is going to go up. We are going to have a sweep here, a floor sweep. It will not take the previous high. It's not going to take the previous high. Okay, you're going to stop somewhere here. Market will retest before taking another one. So that is it. So when we are talking about the break of structure, this is where break of structure occurs. I like that color. Hope you guys can hear me. This is break of structure. This is break of structure for a buy setup. Okay, I've not done anything concerning the sell setup yet. This is our previous low. Sorry, thinking we are doing this thing. For the type 2 liquidity, this is the break of structure. So now, how are we going to identify these things in the chart? When you go to the 4 hours time frame, because this is where you will be able to see how the market goes. Okay, this session I'm doing retesting now. Let me backtest and see what happened in the market. So for editing the block of structure, since I've shown you now, for a sell setup, what did I do it? So for a sell setup, this is the buy setup. Now for a sell setup is the inverse of this. Have you seen it? This is for a sell setup. Then for a buy setup, you just click here, click on invest scale. So that is how it goes. So now let's go for a buy setup. Let's search for it. Let's search for a buy setup in the chart. It will almost for 10 minutes. For a buy setup, stay with me. So this is an example of it. Market comes here from a swing low, comes to the swing high, have you seen it? So this is the direction of the market, and as you can see, we can identify the possible swing high. Yes, yes, another one here. So that is it. So we're moving to our today class, talking about the point of interest in all charts. Point of interest. Is a point of interest. Is a 4 hours time frame. Let's go to 1 hour time frame. Let's go to the 1 hour time frame. Right. Let's go to the 1 hour time frame. Now in the 1 hour time frame, point of interest is where we identify the supply and demand zone, and we can also search for our our order block, liquidity, and your protected load. Okay, so that is it. Now for a for a sell setup, so for a sell setup, as you can see now that BTC is about to giving a direction to go down after forming this. So this already since the market is going downward, have you seen it? This is our order block. This is the order block. So order block is for a sell projection, order block is the last buying candle before the market, the last green candle, because the market started trending downward. Okay, it's the last green candle before the market started trending downward. So if you can see here very well that the last selling candle before the market goes up was the last bearish candle before the market goes was this red candle here. Have you seen it? So that is it. That is our order block, which is the same thing as the sell candle, right? So for this order block that is being found here, we can also normally, if you want to trade this, maybe we'll wait for the price. You wait for the price to come up from this. That's what the normal traders will do. Come up, come down, come up, then sell, right? Then sweep. Then after sweeping, we can now come and have, because this is the type 1 liquidity. You see, after sweeping, you will now come and have another high. Have you seen it? So waiting for this direction, we can also set a buy position from here, right? But we won't do that because already seeing this market right now, from here, we are expecting BTC to fall to $88,000, right? BTC is going to fall to $88,000. This because already in this chart we can see this was our higher low, our higher low, lower high, lower low, lower high. This is how the market was moving. Lower, comes here again. What did it create? Sorry. So this is it. I'm coming. We are going to do this together. this is it. Let me zoom it so that you can all see what I'm doing. This is what I'm doing. This is what I'm doing. Isn't it? Isn't it? Isn't it? Isn't it? The market was going down. Down. So this is already a type 1 liquidity. Which if I should invade this, you can see what it means. So it is a type 1 liquidity. So what we are waiting for now is for our entry. This is our entry, right? So this is like our our demand zone, and this is like our supply zone, right? This is like our supply zone. So we are going to set up a trade, right? We're going to set up a trade. You're going to set up a trade right now after analyzing it, because we feel that it's going to be a sniper trade, right? Because the price is going to retest down to the supply to the first order block, right? Let me write it so that you understand what I mean. Order block. This is our order block. So this is it. The last green sun candle before the market starts selling off. That is it. So setting our sniping trade right here, because it's going to be a 1:1 ratio to me. The market is going to retest down here. It's either it breaks it, then it goes up. So you're gonna come here and set short position. So that is it. This is going to be our short position. I'm going to enter the trade here. Using it. Then while we set our stop loss slightly above, because this is also a demand zone. So if the price should break here, if the sellers, because right now this is the zone of indecision. Okay, this is a zone of indecision market. That is, the market is consolidating. Have you heard? Indecision market. The market is consolidating right now, so we can't trade right now. It's either we wait for it, for the market to break down here, while we state our stop loss, well, we wait for a buy position here. Once it breaks this previous higher high, we can now enter from here, this liquidity, and we pin it up right here. So that is it, and that is what we are going to wait for. Okay, that is what we are going to wait for. So going down to, since it has not break yet, once we break, we go to the 15-minute time frame, right? We move to the 15-minute time frame. You see the market is still consolidating. After that, we move to the 15-minute time frame and set. So we can say that when the market reaches 97,619, we take a buy, right? And once the market reaches it has to break this, right? It has to break this before we take a sell direction. Not too much. 1:7, 3:9 ratio. So now 1:3 risk reward ratio is the first one. So that's what we are going to wait for, right? So if the market should break here 97,746, we set our stop loss below here. You know, you also have to rebuy here, right? Then we set our stop loss below this. We just give space for spreading. That's our stop loss. Then our take profit will be this zone. We're gonna have take profit 1. We're going to have another take profit 2. So the blue line here is our entry. The red line here is our this thing. Yeah, then the green line is our take profit. The green line is still our take profit. So that is how we are going to execute this trade. But they just wait and see how it goes. Okay, so after that, after analyzing the market, and I believe you can see it, what I'm doing is in indecision market. We wait for it to happen. Then we go to our KuCoin. You see the market is already you go to KuCoin. You go to KuCoin. So I think it was the first one. Remember, the first below line is 95,408, right? 95,208. This place is gonna be like a fake breakout, so you have to calm. Don't sell it. See what's going to form before you buy or you sell. So the blue line here is 95,000. Our take profit is 104. Our stop loss is our stop loss is 92. So 90, 95, 92, and what? 104. 95, 92, 104. So you go to your KuCoin. Once you come to your KuCoin app, you come to your KuCoin. You wait so that you can sign in your KuCoin. If you haven't, I've dropped the link in my description section of this class. Go in there. The first one is a link. The second one is if you're interested as a streamer, you can go ahead and follow up and join and participate. Right? You come to futures. Okay. So you come here. Price is 94. Remember, it's a limit. Is a buy limit. Once it is 95,000, $0.95. 90, 900, 9,000, 910. You're gonna say 1,000. 100,000. Let's say 50,000. 5,000. Right? Then our take profit was, now that it was 97,000. Our stop loss was 90,000. Something wrong. So that is it. Order 5. So this is where you're going to place your trade. When you deposit your money, you first of all come to futures. You select the pace you want to trade. If it is BTC, you click on it. You enter the values that you want to, your take profit, your stop loss. But for now, I'm going to wait for that trade to trigger before I enter. Okay, so thank you guys for watching. I really appreciate your time. We will meet again. Thank you. Bye.